Let me tell you a hard financial truth that most people don't want to hear. You work hard throughout your life, you save, you pay your bills on time, but guess what? You find out that you're still not wealthy. Now, not because you're irresponsible or not because you are lazy, it is because savings is not designed to build you wealth. Savings is only designed for like emergencies, not actually designed to build your wealth. What wealthy people do is that they own assets. Hello, everybody. Welcome to my YouTube page. My name is Nancy, and I'm your favorite internet wealth, mindset, and investment coach. And in this video, we're going to be exploring how we can invest to build wealth as opposed to only saving. Now, don't get me wrong, savings is absolutely fantastic because why? You don't want to sell your investment. So you don't want to liquidate your investment every time you need to get something small. For example, you need to get your nails done or your hair done. No. You should have some savings, but most of your money should be working for you through investments. Now, would you notice that in the last maybe 10 years, what you could have bought in your grocery bill, for example, going to Tesco or Walmart or anything, $50, £50 would have filled up maybe 2 bags. Now, 5 years later, £50 is barely filling up £1. That is because inflation actually eats into our wealth. So you might be thinking, yes, I'm saving money every single month and I get some cash from the bank every month. But if you calculate it, the inflation rate currently now in the UK is about 3%. The best savings rate I've seen so far, this is 2026, is 3.6%. So it just goes to show that if you're only depending on savings to build your wealth, you only have a little 0.6% year on year building your wealth. So savings is not designed to build your wealth. Let's explore another option, because when we say inflation destroys the money, yes, what wealthy people do differently now is we invest. And you know how I said we? Yes. I have been investing for the last 10 years in the financial markets. I have made my mistakes, but I've learned a great strategy that works for me. And this strategy have taught to over 1,000 people that we're in a community of like-minded people building wealth together and doing life together. Anyway, so what wealthy people do is that we own assets. Now, you can own a variety of assets. You can own real estate, you can own equities, stocks, you can own REITs and commodities like silver, gold. There are just so many things you can own or operate as an investor. So today, let's explore the ETFs or equities. What are ETFs? ETFs are exchange traded funds. This is an example of an ETF is the S&P 500 or the FTSE All World. Now, the S&P 500 is the most popular ETF on the market. This essentially means that we're owning a basket of stocks and we do not own individual stocks. So the S&P 500 contains 503 of the top performing companies in the world. Companies like Apple, Nvidia, Tesla, Meta, and the list goes on. JP Morgan, Berkshire Hathaway, Coinbase, and the list goes on. So essentially what it means is that we're buying the whole fund as opposed to investing in each of those companies. Data has shown that people that actively select securities or investments don't do as well as us that passively invest or passively select securities. So essentially what I'm saying is that ETF basket will give us a lot of growth because we're tracking a specific index, in this case, the S&P 500, and we'll just keep every single month, keep putting money into the S&P 500, depending on how long you want to invest for. Data has shown that the longer you invest, compound growth will do the heavy lifting. Now, Nancy, what is compound growth? Compound growth, in my opinion, and what Einstein said, is the eighth wonder of the world. Compound growth is interest on your principal, which is the amount, or your capital, then interest on the interest. Let's say you've made a 10%, you've invested £100 this year, and you've made a 10% return on investment in the year. So that's £110 altogether. Now, the next year, even if you don't invest anything, you're still going to have interest on £110. So you see how if you keep leaving it over a period of time, you actually have a snowball effect. where you can't even remember that, oh my God, I put in a specific amount in my principal and you've forgotten it because your compound growth has taken over. This is how wealth is built. Wealth is built through patience, long-term consistency. Regardless of what the market is doing at any point in time, wealth is built consistently over a period of time. You need compound interest needs time to do the work. So I would implore you that even if you start investing today, leave it, give it time to do what it has to do. So there are other ways of investing as well, assets like real estate, where we explore REITs, real estate investment trust. Now, in another video, I'm going to go into more detail about REITs, but this is essentially about owning income generating real estate. We don't have to own these properties physically. We don't have to manage them, and we don't have to deal with tenants. We don't have to get a mortgage, but you can get exposure into real estate by investing in REITs. Now, a benefit of investing in REITs is one, it diversifies our overall portfolio. So we're not putting all our eggs in just the ETFs. We have a balance by investing in REITs. Two, it gives us income, which is passive income every single month. So depending on the REIT you invest in, there are so many. There are hybrid REITs, there are mortgage REITs, there are so residential REITs. There are just so many in the market. So you have to do your due diligence and ensure that you're investing in the right type of REIT for your unique circumstances. But then investing in the ETFs, guys, and REITs, two different asset classes, will give us diversification and balance in our portfolio. So this is the strategy I share for beginner investors that want to start their investment journey. I've shared this strategy with over 1,000 people, and now we are keep growing and learning every single day. If this sounds like something you would love to do or something you would love to explore, in the description below, you're going to find a link to join any of my classes. So you can start beginner, and they're beginner classes. So what are you going to get in the class? I teach you about each of these assets. Then I share some assets you can invest in, either ETFs or REITs. And then I help you build a pie or portfolio in your brokerage account. So what will be needed was that you need to open a brokerage account first to even start investing. And a brokerage account is an account that facilitates the buying and the selling of this investment. So it's essentially an investment account. If you're in the UK, trading 212 is perfect. It has a lot of commodities. It has lots of different assets you can invest in, but you can please invest through Vanguard, Moneybox. The list goes on. You can do your research to ensure that you have the right one that fits your circumstances. But I recommend, or I use Trading 212 here in the UK. I also invest through the Stocks ISA account. Why? Because any returns on investment, capital gains, and dividends I earn from my REITs, we don't have to pay taxes. It's a tax-free way of investing, and hence you build wealth even quicker. So in the UK, we have an allowance of £20,000 that we can save and invest, and any returns will not be taxed. Now, if you're in the US, you can invest through your Roth IRA account, and you can open one with Fidelity. If you're in Canada, you can open a TFSA account with Wealthsimple. If you're in Australia, Trading 212 works there. And if you're in Africa or any part of the world, or Africa or any other part of the world, you can invest through Interactive Brokers. Nigeria specifically, you can invest through Bamboo, Kuda Bank, Trove, Chaka. And if you're in Ghana, you can invest through Bamboo, Trove, or Blackstar. So that is the first step to building your portfolio or starting your investment journey. You need the right type of account, because your savings account or your current account are not fit for purpose for investing. And once you have your account already opened and set up, then you can now invest in ETFs like we've spoken. An example is the S&P 500, or in REITs. There are so many types of REITs, so it will be important to do your research. However, if you'd like me to hold your hands one-to-one to help you, or join any of my classes, click the link in the description below and sign up for any of the classes today. Now, thank you guys so much for joining, and subscribe, like, and share this video, and see you on the next one.